Good morning, traders from every part of the world that you're joining this series of the morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one broker here in Kenya and beyond. Now, beginning with the usual, this is going to be a pre-recorded YouTube video. Kindly visit the HFM YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button so that you're not left behind on future content that we upload from time to time, which is very essential in your financial growth journey. So I'll give a 3-second moment of silence so that you can like, so that these videos can keep on reaching more and more people and have positive impact in the long run. So here we go. Very nice. Now with that out of the way, we begin with our usual routine of checking the economic calendar to see what is happening fundamentally for us to have a bias for the day and for the days to come. Like we have stated times without numbers, fundamental analysis gives us market direction by telling us the economic health, and from that we can translate it to different assets and navigate on that direction following the trend. Then we use technicals for entries and exits, risk management, trade management for even better results. Now today is on the 4th of December. See what we have. On the 4th of December, during Sydney session, we have the GDP growth rate year on year come out right here. The gross domestic product Q on Q, Q3 is for the third quarter of the year, which came out at 0.2%, which is came out at 0.3%, which is less by 0.1% from what was anticipated, which is 0.4%, and the previous was 0.2%. Yes, this Q3 came out slightly higher than the previous Q2, but it came out less by 0.1%, which will have drastic impact on Australian dollar, and we shall see it's going to be weakening as we move forward. As we look ahead, we see that we have quite a packed week with a lot of economic data coming from the Eurozone, from Spain, PMI from France, from Italy, PMI also, from Germany, PMI. We see quite a number of high impact data coming from the leading countries using the euro currency. We shall be monitoring that as they come and updating them on our social media handles for you to go and have synthesized information. It is digested for easy consumption. Later also we have PMI also coming from United Kingdom. PMI is an indicator of the inflation. Every time you hear PMI, anything with cost implication will tend to measure the cost of living, and PMI falls under that category. Then during New York session, we shall have ADP employment change, which has shown us tendencies of showing us the direction of the long-awaited NFP, the non-farmers payroll, which is the hugest, most numerous, impactful news that we are waiting for this week. And it will be coming out on Friday, the non-farmers payroll. Remember, for the last month, NFP was released as 12K, the lowest we have seen. Now we are anticipating it to come at 200K. And this shows the number of people to be employed away from the agricultural sector, which is very key in having positive or negative implication on the economy. So moving on swiftly to the charts to see how this will play out. Very nice. Beginning with Euro USD from the daily time frame. We see that the reaction that we had quite a couple of days ago on the 1.03858 is still in play, and we had that reaction from that area of interest, technical area, if you may like. And if we zoom in to see what is playing out, we see a bounce of that. However, we have been having some sort of consolidation where price is neither moving in an uptrend or a downtrend. Let's move to a lower time frame to see the implication on that. From the 4 hours time frame, we could see that price has been printing sideways for quite a number of days now, from the 2nd of December. That must be on Monday. We'd want to see price come and break below the lows, suggesting the weakening euro and the strengthening US dollar, but that is not the case. We shall wait and see. For GU, we see also a bounce from the 1.26 to 15, and we see also a little bit of consolidation, a scenario that we are likely to see because of the low liquidity right now in the market. As we welcome the festive season, not so much happening, but as we walk into the days to come, we shall be observing what is happening. We see that price is moving in a ranging or consolidating manner. Would want to see price come, this is on GU, come and take out lows at the recent low that is created here to suggest fundamental analysis marrying with technical analysis for us to get in confidence for the sales. For AUD USD, we see that we broke the key level right here. We might be retracing to retest it, but as we know right now, the AUD, the Australian dollar, is extremely weak because of the weak GDP data which came out this morning during Sydney session, suggesting that we would be much more safer if we look for sales in this particular asset. And we see here from the 1 hour time frame that fundamental analysis is perfectly in line with technical analysis, and that is what we like to see as traders. For USD CHF, we still are yet to retest the 0.89490 area of interest or resistance. We know that the US dollar will seemingly have been having an uptrend, so a retest of this key level is likely, but a break above is much more likely. If you go to a lower time frame to see what is happening, beginning with the 4 hours from the daily, we see that there have been attempts to take out lows, and we want to see more lows being taken out to suggest the dominance of the Swiss franc on the US dollar. However, going by the fundamental analysis, which suggests that the US dollar is fairly doing good right now, the US economy is doing good. When we see this high being taken out at 0.88613, we'll be confident to get in for buys and ride it until 0.89457. For USD JPY, beginning from a daily time frame, we see that we have been in a bearish or dovish trend Price has been creating lower lows and higher lows. If we go to a lower time frame to see what is happening, this narrative is yet to continue, with the JPY having a field day over the United States dollar, suggesting that the Japanese yen is strengthening day by day. Why? Because of the news that was released more than a fortnight ago by the Bank of Japan, which indicated positive numbers for the Japanese economy, which directly influences the Japanese yen. We want to see price taking even more lows to suggest movement of price to the downside. Remember, we called it out yesterday somewhere around here, and you see it's printing beautifully to the downside, marrying fundamentals and technicals. For USD card, beginning from the daily time frame, this particular asset class has been moving slightly different, and this could be attributed to the sentiments made by the incoming President of the United States, Donald Trump, where he has promised to impose tariffs and taxes which could go high above 25% on imports from Canada, and that has had positive influence over the US dollar, strengthening it. We see here in technicals it price retesting the 1.39865 and price printing even much more higher. Would want to see these highs being taken out to support that narrative. For GBP JPY, we see almost a retest of this particular trend line. If I zoom in clearly, and we see price is trying to trace to the upside, but remember the Japanese yen is fairly doing good, so we'll be quite cautious when we are getting in for buys. If you go to a lower time frame to see what is happening, we see a quite of recovery from the Great British Pound against the JPY, and a slight change of character from the 1 hour time frame. We want to see highs to be taken out, would support the narrative that the Great British Pound is recovering against the Japanese yen. However, if that is not the case, we want to see the lows being taken out, supporting the narrative that we have been driving on for a couple of days now. For gold, we have been having much consolidation at this particular point, which can be seen from the daily, 1 hour and 4 hours time frame. Would anticipate development of geopolitical news, which we know majorly drives gold. When there is tension and fear in the world, gold acts as a safe haven for investors, both institutional and retail, and that causes gold to go up. The safe haven is because of the indications or implications of fear, which is injected when there's time of tension. And right now we know we are at war in the one front in the Middle East, but with no or little escalations, and also in Eastern Europe. Would be anticipating to see what is going to happen into the week, especially into the weekend, coming in for next week to adjust our positions. Remember, by any chance, this is not financial advice. This is purely for educational purposes. Kindly do your due diligence and remember to observe risk management. Risk management will give you a long run aspect on trading the financial markets, and you could have a lifeline with that in the long run and improve moving into the future. That is it for today, guys. See you tomorrow, the same place, the same time, to do things the same way that has proven consistency. Until then, keep safe and God bless. Thank you.